All right, so we'll get started. So maybe to get started, Andrew and I will do a little intro to who we are at PadSplit, and then Andrew is going to share a little bit more about the overall market launch strategy for PadSplit and what he's been working on across the nation. And then I'm going to talk a little bit more about the Seattle market. So, yeah, Andrew, maybe I'll introduce myself and then I'll let you introduce yourself. Does that sound good?
Sounds great.
Okay, great. So my name is Suzanne Vetillart. I'm a PadSplit host advisor. I'm based here locally in the Seattle area, and I'm a Seattle real estate investor myself. I've got a portfolio of multifamily properties and an adult family home, and I currently work with investors here in Washington State and other markets who are wanting to learn more about PadSplit and understand how they can host and become a PadSplit operator and essentially either make more money or gain back some time. So that's my role. And I'll introduce Andrew.
Thanks for having me on, Suzanne. So I'm Andrew Mackler, head of market launch at PadSplit. Been here for 7 years, joined in 2018 when we had around 60 bedrooms on the platform and we were only available in Atlanta. Launched pretty much all of our markets on the West Coast as well as other regions in the country. Got my uh, bachelor's degree in finance from Wake Forest, graduated in 2016, and then in 2020 went back to school for my master's in accounting at Georgia State. And what brought me to PadSplit and what keeps me at PadSplit is there's a lot of problems that need creative solutions, and I've been able to build relationships. I recently went through my phone, and I think I've talked to around 2,500 people in
Wow.
some way about PadSplit. So it's been really great. You learn a lot, and some of the folks that I work with at PadSplit, hosts and members, have become friends, and we really got to connect on a personal level as well as work together to create affordable housing for folks that need it.
That's great. 2,500. That's a lot of people.
It is, yeah.
All right. Well, I'm going to let you, Andrew, kind of start with giving a sort of map and view of where PadSplit actually is launching and growing right now. And so I'll let you kind of chat more about this.
Yeah, sure. This chart shows the number of active units since we've launched a market. Couple things I wanted to call out. Phoenix, you'll see it in blue, the fastest growing market. There were short-term rental regulations that were put into effect when we launched Phoenix in 2022, and a lot of those investors were looking for a different rental strategy that could still cash flow. Similarities to Seattle, where short-term rental regulations have come into play, and a lot of investors are looking for other options. You'll see Philadelphia. We have a lot of demand for rooms there, and incomes in Philadelphia are lower than the national average. So it just made sense that folks wanted a room and also for financial reasons, in a lot of ways, needed a room rental versus their own apartment. In Charlotte, housing costs increased dramatically since COVID. So there's a lot of need for a more affordable rental option for folks, similar to Seattle. In Los Angeles, we grew a bit slower. In Los Angeles, vacancy for apartments and homes is low, and short-term rentals are still performing well in most parts of Los Angeles. So it's naturally been a bit of a slower growth curve for us, but we know the demand there is there. And then wrapping it up with Seattle, we're going to continue to grow. You can see that in green. So we're trending faster than the cohort of markets and just slightly below the performance of Phoenix. And Suzanne's going to talk a little bit more in the presentation about why Seattle and why PadSplit is needed in Seattle and how investors can leverage it. Um, and then as far as like how unit growth impacts our hosts that are on the platform, it's really comes down to networking effects. So more members to refer their friends and coworkers to PadSplit as we grow. It's a complete housing solution. When somebody's looking for room, they have options to select based on their location, price point, and amenities. We will put more marketing dollars behind the market to drive demand to your listing. More hosts are available to learn from and network with. So you have a cohort that you can continue to grow and learn and do your best possible job with PadSplit. More vendors are available and they have more experience: property managers, contractors, lenders, insurance providers, etc. And then our SEO rankings will improve. Um, and we can go to the next slide and talk a little bit about the markets we're launching. Um, so the markets we're launching are in blue. Those are markets that we're currently hiring a host advisor for. If you know somebody that could be a good PadSplit host advisor, feel free to send them to our careers page and they can apply. Markets in green, we're currently launching, and we have hired somebody full time to be a host advisor. A little bit of information about a host advisor: think about it as the hosts and investors educator, advocate, and support system as they go through the journey of listing a pad split, activating it, getting through the lease up period. And when we're thinking about markets to launch, we really look for the demand for room rentals, right? Are there people on Google and social media looking for room rentals? Are there influencers that are talking about room rentals? Where we know that as hosts list properties, there's going to be more than enough renters that want to move in, and then the platform is able to scale and it really snowballs from there. And you'll see the markets in yellow are markets where we are currently doing marketing to members. We're currently aggregating demand both organically and paid wise, and maybe hiring somebody there in the future. But any of the markets on the map, rest assured you'll be fully supported. And we have a strong thesis and belief that the demand for room rentals is there, and that if you do list a property, you'll get booking requests and will generate significant revenue. Yeah, and I'll kick it back over to Suzanne.
All right, thank you, Andrew. And before we move on, I just wanted to ask, like, what if of your kind of market launch markets has been the most successful, and why? I know on the last slide you talked about Phoenix growing so fast. What was it about Phoenix, the Phoenix market, that made it such a strong market for PadSplit?
Yeah, that's a great question. So housing costs in Phoenix rose dramatically from the mid
Mhm.
2010s into the 2020s, especially accelerating after COVID. There's a lot of job creation in Phoenix, a lot of folks moving from more expensive areas like Los Angeles,
Mhm.
Seattle, Portland, and looking for something where they could get a larger house and a more affordable rental rate or acquisition cost if they were looking to buy a home. So I think the affordability really brought people to Phoenix. And why it was a successful launch. In a lot of ways, there was just landlords that weren't doing as well with short-term rentals. At one point, there was 10,000 short-term rental properties in just Maricopa County, which is a
Wow.
portion of the Phoenix metro. And
Mm.
when the regulations came through and when the work from home trend started to dissipate a little bit, investors needed to do something. They already had a furnished property, so it made sense for them to try PadSplit. And we really had compounding growth effects. As we were able to list properties, the properties were occupied, and then those investors were bringing on additional properties, talking to their family and friends. Hey, you should check out PadSplit. It's working really well for me. So just kind of the perfect storm of opportunities. And I think a lot of those characteristics are common with Seattle as well as
Yeah.
our other markets. And at the end of the day, there's demand for room rentals in pretty much every zip code in America. And
Mhm.
we try to pick the metros where there's the most demand for room rentals. And that really drives our business. At the end of the day, you're coming to PadSplit to generate revenue, and members moving into your room is how you generate revenue.
Yeah, that's great. Well, I will be happy to, share more a little bit about where we are today. And I think what Andrew kind of shared with the graph earlier was that we're really at the beginning of this, market launch. And so Seattle is a new core market for PadSplit, but we're already seeing some really great feedback from hosts as well as members. And so this is a little snapshot of where we are in Washington today. If you can see the numbers, basically we are at 91 units, and I think we're going to get to the 100 room threshold pretty soon. It could be in the next week or so. We are seeing almost 1,800 searches a month. And I'm going to go into the performance in terms of monthly and weekly rental income in the next slides. But this map kind of shows you that, we're not only in central Seattle. PadSplit is actually in cities that are actually 45 minutes, away from the Seattle center. So we've seen new launches in Puyallup, in Tacoma, Auburn, Everett. We're talking to some hosts that are in Kitsap County, so closer to Bremerton and Gig Harbor. And so really PadSplit can be a solution for anywhere there's workforce, which is essentially everywhere. So we're really excited to see the growth and the excitement of hosts who want to come on the PadSplit platform and take advantage of the growing demand. So this is a graph that kind of shows you the breakdown of where our units are. I mentioned some of these locations, but Tacoma, especially Parkland, is a really great location for PadSplit. Seattle as well, and then Milton is in here. Milton is very close. It's in between Federal Way and Tacoma. And then Tukwila is located really close to SeaTac International Airport. So that's a great location. Think about all the people that work at the airport, airline crew, TSA, people who are all kind of commuting probably an hour to get to their job. Whereas, with rent by room, they might be able to live much closer to where they work. So other locations include Lakewood, Everett, Auburn, and Lacey. So this is where we cover, what is the actual revenue that hosts are getting from PadSplit by putting their properties on PadSplit. So PadSplit uses a weekly rental rate. So we're including a rate for private bathrooms. So this is a private room, but then this person has their own bathroom that they share. They don't need to share. And then the shared bathroom would be a private room where their bathroom is actually shared with, maybe one or two or three roommates. So there's definitely a premium for a private bath. And the way that we calculate the monthly rate is we multiply that by 4.33. And so for a private bath, your monthly income is around $1,469, and for a shared bathroom, around $1,209. And talking to a lot of hosts here in Seattle, I think a lot of people have been surprised that the numbers are so high. I think, if we compare to the cost of a studio or the rental rate that people are getting, for one bedroom, these numbers aren't that much different. And so this slide goes really more into the demand that we're seeing for Washington as well. So 12 days is the time it takes to get your first booking, and 27 days to 80% full, and 1,735 member searches in the last 30 days. So I'll just kind of pause here. Andrew, was there anything you wanted to kind of share from your experience, working in other core markets? Like how would you summarize the demand for Seattle, for the opportunity, I guess, for hosts who are looking to, use PadSplit, or people who are just following the rent by room trend? What do you see in the Seattle market from your experience?
Yeah, I see in the Seattle market that there's definitely demand for a more affordable housing situation for folks. A lot of the current co-living properties are targeted at Amazon workers, and they're targeted at people that are working at Microsoft. And while that's a good part of the market to be in, it really misses the more affordable side. So think about people that are making 40 to $60,000 a year versus people that are making 150 to $200,000 a year. That part of this market, the more, to call it blue collar part of the market, is really untapped. And I think that's where the opportunity lies. And the search volume we're seeing in Seattle really suggests that the demand truly is there. For example, in Las Vegas, we have around 5,000 member searches every 30 days, and we're able to support 1,000 plus rooms. So if you
Hmm.
figure we're just around 100 rooms in Seattle, and we already have 1,700 member searches a month, if you look at the ratio, it just really says, oh, wow, we need more supply. And that's a
Yeah.
big reason we're doing this webinar, is to meet investors and be able to push towards the unit goals we know that are needed for the community. And also something that, as I mentioned earlier, starts the networking effects, which are a rising tide that helps all the hosts out.
Yeah, that's great. So on the next slide, I'm going to kind of share, maybe just on the same theme of what Andrew just shared, kind of the Seattle outlook. So these are the locations where PadSplit already is established. You can see where we started in Atlanta, Georgia in red, and then these are the other core markets that we have. And then Seattle launching just at the beginning of this year. The map that Andrew shared at the beginning of the webinar shared where we are expanding and going into. So it really looks like PadSplit is going to be covering, most parts of the country as it's growing. And I wanted to share this graph because it really kind of models what Andrew was already kind of talking about with what we've seen historically in other markets. So if we follow the trends of how PadSplit has grown in other markets that are also expensive and on the West Coast and have, challenging regulations, and we look at a market like Los Angeles, we can anticipate, by the end of the year or in another, 10 or so months, we could be around 250 to 400 rooms. So I really like to highlight to the people that are looking at PadSplit today as, you are an early adopter and you're getting to get the advantage of, being in the market early and then riding that growth as we continue to grow. And so, Andrew, have you seen that in other markets, other core markets where, you kind of identify the pioneers who get PadSplit and the opportunity and they just, either scale with PadSplit or they really like build a business around this? Like what have you seen in other core markets for investors?
Yeah. Yeah. Often our best sources of new business come from our existing customers referring their friends, family, and other real estate professionals in their network. And then also expansion of, a host will list a property, it will perform well, and then they'll continue to list more properties from their portfolio. So at the end of the day, it's kind of the snowball effect. Once we get our core of early adopters, that really leads to additional growth and additional introductions and opportunities. And I think first mover advantage is definitely a real thing. The faster you learn about PadSplit, the more exposure your property has, the more members you have to refer their friends and family to your property, the better off you are. So there's never a point in time where it's too early to get into a market. I definitely think you'd rather launch now than wait for 6 to 12 months, face a bit more competition, and have to climb the learning curve when a lot of the other hosts have already succeeded in understanding PadSplit at an intimate level, have systems and processes in place, and are able to continue to expand and even purchase new properties specifically for the platform and renovate them in a way that's efficient use of space for co-living.
Yeah, I think that's a great amount of foresight, right, for people who kind of can see the trends and how PadSplit is successfully launched in other markets. Um, and so, one of the opportunities that I kind of wanted to share was the trends that I see, specific trends for the Seattle metro or Washington state market around PadSplit. And so, one of the things that we're working on with a few developers here locally is, DADUs are a very big thing here in this market. And so, with a DADU, you're usually buying a lot with a house on the front part of the property and then you're going to develop on the back. And so for the developers we're working with, they're actually looking at that front house and looking to operate it as a PadSplit, generate more income from it, and then they're additionally going to be able to do the dadu. So it's kind of a way to like supercharge the property. And I definitely think this is, in terms of acquisition, a great opportunity in different markets for investors to be looking for. Another opportunity that we are, just at the beginning of looking at is, on the east side, in places like Bellevue and Sammamish, we have very large, oversized homes, more than 3,000 square feet, and in some cases, these homes are vacant. And so, working with investors or operators or even homeowners who are looking to lease their property and generate income And PadSplit is really kind of a solution for them, especially if they don't have any landlord or property management experience. PadSplit really takes care of like the heavy lifting side of what it takes to, use your property as a rental. And the last one is the house hack. I've actually been working with a host who started with a house hack about 18 months ago. And from that house hack, he's evolved to where he has now 3 properties, and he's just going to continue to grow and scale that. So, if you are living in the property and you are actually getting a low, maybe 5% down loan, living in the property for 1 year and 1 day, renting all the other rooms. So all of your expenses are paid, and then going and getting another property after that 1 year and 1 day. So I think those are paths that make sense, and the numbers actually can pencil in an expensive market like Seattle, where oftentimes people say nothing is really making sense right now. So I did want to touch upon this, and we're not going to talk too much about the legal side of PadSplit, but when it comes to co-living in Seattle and Washington State, we do have HB 1998, which is a bill that supports co-living, and it allows up to 8 unrelated people to live together wherever there are multifamily zoning. It also allows for not needing parking requirements if you're within a half a mile of some public transport. And so this I would say symbol and sign from what's happening on the policy side of things in Washington State, I think just kind of really demonstrates where the state and the city of Seattle want to go when it comes to affordability. And I really like to highlight how PadSplit kind of fits in partnership with that. We're not sort of working against policy, we're working with policy. And so we will actually be having a webinar in the next couple of weeks where we're talking just about legal. PadSplit's head of legal, Charles Gross, is going to come and speak about the local market, and we'll talk more about HB 1998 and other legal questions that people might have. But I did want to highlight that this is sort of, a lot of times I talk to people who are asking about the difference between Airbnb and PadSplit. And that's where I really like to highlight where, in markets like Seattle and Washington State, PadSplit is really kind of building in parallel to what the city really needs when it comes to providing more affordable housing for the community. Pretty different from the solution that Airbnb provides. So Andrew, would love to hear your feedback. Just I know you've worked in different markets on the West Coast, in the South, on the East Coast. How do you see things like these local like policy or bills, in Seattle? How does that help, I guess, people who want to get into PadSplit, or how does it help the growth, I guess, of the market here?
Yeah, it definitely helps the growth of the market. It just provides regulatory clarity to investors that want to list a property on PadSplit. In some of our other metro areas, we do have a legal structure that allows us to operate there, but there's always a bit of ambiguity, and code
Mhm.
enforcement doesn't always interpret our agreements in the correct way. It may want to give a warning or maybe a citation at some time, but it's important to keep in mind that PadSplit has had very few properties that have been delisted due to regulatory concerns. And I think in a market like Seattle and Washington State as a whole, having the HB 11 or 1998 in place is really going to be great for peace of mind. You're not going to have to worry about having to talk to code enforcement about something related to your property as far as the number of occupants there. So, yeah, I think it's an incredibly powerful tool that investors can use in Washington State to sleep really well at night, know that the community is behind them, and just have peace of mind that their real estate investment is going to be low stress when it comes to regulatory compliance. And do keep in mind that you still want to make sure you're a good steward of your property for the neighborhood and your neighbors, and you want to be in communication with them too. Just because of this regulation doesn't mean it's free for all and you can do anything with zero ramifications. But it does provide the clarity around what can be a key issue was the number of unrelated individuals living in a property.
Yeah, I think that's really great, sort of context that, for this ambiguity, right? It's like, how do we operate and not go against what, policy is wanting us to do? And I think, yeah, the more we know about kind of the direction that neighborhoods are going, the more we can all work together to, work on this affordability crisis. So, I just wanted to include this slide here. This is the information on the upcoming webinar. It's going to be on July 7th at 12 p.m. And you can register for this webinar by going to our website at padsplit.com. There is a link in the footer. It's under the tab that's called events for investors. And so if you want to get a link to that, go to our website or reach out to me as well. I can send you a link. So now we can maybe move to some Q&A, Andrew. And I had some questions that were prepared and that, some people had shared with me that they'd love for you to help, cover and answer. So I'd love for you to maybe dive into some of these questions and help give some insight.
Sure. Yeah. So first question, is PadSplit a property manager? So we are not a property manager. We are a marketplace. So for things like repairs, maintenance, utilities, that's going to be the responsibility of either the owner of the property or the owner's management provider. So think about PadSplit is the demand side of things, the platform, the collections, the support, but we're not actually going to be physically going to the property. We're not going to be repairing things at the property. We're not going to have utilities in our name, and we're also not going to be taking physical ownership in any way of the PadSplit property that you would list. Next question, Suzanne. I think you'd be great to answer. What's the ideal PadSplit property?
Yes, so in the Seattle metro area, what we're seeing works, for a pad split property is a larger property, so one that's, ideally more than 2,000 or 2,500 square feet, and Scott has many bathrooms or potential to add bathrooms and bedrooms as possible. So I've been working with some developers and investors who are looking at 8 bedrooms up in terms of acquisition or conversion of properties. And really it's because the larger the property is and the more rooms you have, the more the numbers make sense. We definitely have smaller properties that are 3 or 4 bedrooms. But the challenge can be is, when they're not fully occupied or when there's some turnover, the numbers get really tight. And so that's where, I see properties working are, larger properties in B and C neighborhoods. I would avoid A neighborhoods. Oftentimes, when we have any issues around co living, it's usually because neighbors complain. And so, if you're in a neighborhood that you could imagine doesn't want to have, a bunch of cars in front, that would be a neighborhood that you would probably want to avoid. No HOAs. And there could be some HOAs that this isn't an issue for, but generally, you would need to kind of do your own due diligence on your own HOA to see if this would be a good fit or not. And then parking, I mentioned the parking before, but in Washington State and in the Seattle area, Tacoma, we're finding that most of the members that move into pad splits have their own car. So if you've got 8 bedrooms, you would imagine that they're, when you're fully occupied, you've got 8 cars in front of your house. So just thinking about, your driveway, garage, or off-street parking, is there enough parking for everyone? And so, for example, I was looking at a property a couple weeks ago that was on a cul-de-sac, and we were looking at 8 rooms. And when we really looked at it, it wasn't really convenient for having all of those people parking and getting in the way of the neighbors. And so that's one of the things that I think is important to look at if you're on the acquisition side. And the one of the properties that we onboarded recently in Tacoma is actually a property where the owner is doing a pad split, but in the future she's going to be able to do a dadu. So things like that, where you're finding a property that's got multiple strategies, multiple exits, multiple potential for ways to generate income or force appreciation. I think that's what I would be looking at in Washington today. Um, what I would avoid is trying to force a property to work. And, if you've got a property and just kind of, hoping it will work as a pad split, that's oftentimes, that can be challenging. And, pad split is a great solution, but it's not going to solve everyone's problems. And so that's really my role as a host advisor, is to help people have the real numbers and have realistic expectations of where we're a good fit and where we can really help, and where there might be some challenges. So that's what I would say for ideal property. I can go to the next question about where to buy in Washington State. Tacoma, I've mentioned it a few times on this webinar, but Tacoma is a great location for pad split. And again, now that people are doing dadus in Tacoma, doing a pad split with a dadu, I think is a great opportunity. Also, Federal Way, we're seeing that being a strong market. In addition to Everett, we had a property in Everett that got fully occupied within 34 days. So we see a lot of demand there. Another market that I think is really emerging is SeaTac or Renton. I think that's a really great market for anyone who has a property that is looking at workforce that lives and works close to the airport, or people even that are working at hospitals. Renton and SeaTac is a great location.
Yeah, I'll take the next question. Will PadSplit come to Hawaii? Absolutely. Our goal is to be in all 50 states as a core market. So expect us to make an announcement sometime over the next, 6 to 18 months about entering Hawaii. And keep in mind, if you do have a property in Hawaii that would be a good fit for PadSplit, you can list it now as part of our PadSplit Anywhere program. So technically, we are available in Hawaii, and we will be ramping efforts to grow and scale there. And it's one of the least affordable housing markets in the country. So I believe there will be a lot of success for hosts there, and the challenge will probably be finding the inventory much more so than finding members that want to move into the property.
And Andrew, I have a question regarding Hawaii. So when PadSplit is announcing markets, how do they make that decision, and how do they announce that they're going to be launching?
Yeah, so we'll make an announcement on social media. So follow us on LinkedIn. We're going to announce and continue to announce markets we launch there. And as far as the decision to launch in Hawaii, I think it relates back to our decision to launch any market. Are there individuals that are looking to rent a room there? And we measure that based on Google searches for things like rooms for rent. I need a room. In similar searches along the line. So it's always data driven, and I think Hawaii is a strong candidate. I've actually talked to a couple investors in Hawaii that I've met through different channels at PadSplit, and they're really excited about the profile. And I think, given that Hawaii and its history, we really want to be there for Hawaiians. We want to work with people from Hawaii and really have us add to the community versus trying to bring in an outside idea and have that be something that's us. It's really going to be for them. And I think that's how we look at every market. At the end of the day, the people that live in the city, the people that own properties in the city, they, have the sense of ownership. We're really there to just give them a tool to help improve the operations of their rental properties, and then give the renters a tool to be able to find something that's more affordable and is still clean, safe, and functional. So definitely a local driven company, even though we are a national brand.
Yeah, I love that. And yeah, I think definitely with what I've heard from, investors who've got properties in West Coast markets, Hawaii is definitely one new market where rent by room isn't a new thing. And it's really more, a tool that PadSplit would be able to kind of help people who want to do this at scale. So that's exciting news to hear. This next question, I can answer part of it, but Andrew, I kind of also wanted to get your feedback on the lending side of PadSplit. I know that, because PadSplit lives a little bit in this gray area, what would you recommend to someone who is, looking to invest with PadSplit, and it's maybe not a typical commercial loan or typical DSCR loan, what would you recommend for them, whether it's looking for a lender or even talking to a lender and saying, hey, I want to do this kind of, leasing strategy. I want to do a pad split. What would you recommend for them to where to get started, I guess, with lending?
Yeah, where to get started with lending. So PadSplit has a list of around 10 national lenders that have experience underwriting loans on PadSplit properties. And we also have a number of localized lenders as well. So I would talk to our team, reach out to us, and we can connect you with a lender that's familiar with it. And there's multiple options. You can do a debt service coverage ratio loan based on what the market rent would be as a long-term rental. You can do a loan based on what the air DNA data suggests if it was a short term rental. You can also purchase a property, get a traditional conventional QM loan, and then put up the walls of the property too. So you're taking a loan on a conforming asset and then making modifications after that. So there's a lot of different ways you can approach it. And when it comes to acquisition and, as they say, a hard money loan, typically, hard money lenders have questions about pad split, but once they're comfortable with how it works, the structure we put into place, and we show them examples of similar properties that have performed well financially, they're usually pretty on board with it, and they tend to have less bureaucracy involved. So it's the refinancing of an existing co-living property that has 5+ rooms, has some nuances and challenges, and I would just really rely on PadSplit and our vendor network to be able to make those introductions for you. Have a number of individuals that are hosts. They've done hundreds of PadSplit loans, and they're really familiar with how to present your property to the loan buyer, how to do the underwriting correctly, and then all the PadSplit lingo and words and the way our payouts look. So there's just that comfortability and cohesiveness to the process of going through one of the lenders we work with. And keep in mind, we're not earning a kickback or an incentive for referring you to one of our lenders. At the end of the day, the vendor network is there to serve the host, to be able to help your expansion, to help jumpstart real estate investors' careers that may be newer to the space. It's not a lever for us to extract additional dollars from our host base.
Yeah, I want to kind of echo what you were saying, Andrew, about sort of the team effort of having a vendor network, and I think that's really been true as we've grown the market here locally in Seattle. It's it really is referring people to the right teams who are familiar and experts in their own territory and getting them to kind of advise the people that we work with. So yeah, it's been really great for me to find people who are really excited about this opportunity, and then always giving them the specialist to go to get more information about that specific piece of getting their property ready. It could be whether it's a contractor, whether it's a real estate broker, even title company. These are all different parts of the process where you have to kind of coordinate. And so, yeah, I think that's like one of the real advantages that PadSplit does provide. I'm very familiar with the Washington state and local market, but I rely on host advisors in other markets who are specialists in their area as well. And they always give me the best recommendation for like property managers or real estate brokers. So that's something that would really emphasize to people who are just wanting to educate themselves. PadSplit is such a good resource. We provide a lot of that support and help to our community and people who want to do this. So definitely take advantage of those resources on our website. Andrew, I wanted to shift the last questions more to the member screening and eviction side. I will say that in Washington State, which is very tenant friendly, I get asked once a day about evictions, about members. And so, can you give a little bit of a better understanding of who are PadSplit members? Because I understand that PadSplit has a really strong marketing machine to, reach people and get them to come into our, member process. But like, who are these people living in PadSplits across the country? And what are the criterias that PadSplit requires for these people to become PadSplit approved members?
Yeah, that's a great question. So there's 4 stages to the PadSplit member approval process and screening process. Number one would be an identity verification. So, Are you the person that is applying? We look at a selfie and a photo ID and past information and have a data provider that does those calculations in an incredibly accurate way. We do a background screening, so no felony convictions within the last 7 years. We do a income verification, so we look at income. Any legitimate source of income can apply, whether that's Social Security, disability, a W-2 job, a 1099 job, a gig economy job, and any real small business. And if you have the proof that you're earning money operating your own business, all of those we can review and approve. And then the final stage is a rental history check. So we look at your rental history. You have to have one or less evictions to be able to move forward with the PadSplit process. If you have two or more evictions, you unfortunately won't be able to take advantage of it. And when you think about who our members are, it's a very, very diverse group. At the end of the day, around 60% of our members are women. We also have an average age of around 35 years. We have individuals that are fresh out of high school that have a job that wanted to move out of their parents' house. We have individuals in the latter part of their life that are in their 70s and 80s that needed an option that worked for them. They actually wanted to live with other people and they didn't want to burden their family, and everybody in between. Most common jobs that I've seen would be warehouse jobs. I think we really appeal to that audience well. So, working at an Amazon warehouse, working at a distribution center for UPS or FedEx, working at airports as well, especially in the cargo and baggage section and concessions. So, when you think about like what that means income wise, I'd say it's usually individuals that are earning $20 or more an hour. And at the end of the day, we do have individuals that are on salaries that, we have somebody that's actually a doctor and they work out of state for a week a year. So they have a PadSplit room for the time they're going to be in that state. And we also have traveling nurses that live with us. The traveling nurses, they have a home that they live at when they're off work. And then when they're working in a city, they rent a PadSplit for 3 to 6 months. It works out quite well for them. So that's another demographic we've targeted. And then if you think about students, students are definitely a good candidate for PadSplit. We're more affordable than the dorms. It's a more flexible situation. You could move to a different property, or you could choose a part of town you wanted to live in, and you would have to have an income source and work a part-time job. So part-time students, graduate students, and community college students are going to be more prevalent than a traditional student that's part of a four-year undergraduate program.
I wanted to come back to one of the screening parts that you mentioned, evictions, and so if there's more than two evictions, they won't be approved. What have you found that hosts can do to ensure that so let's say the member is approved, we've verified their ID and employment, and if they are, wanting to live in a property, what do you recommend for hosts to do, or what kind of screening should they do on top of, I guess, PadSplit screening to make sure that this member is going to be a good fit in their home?
Yeah, that's a great question. I think anytime you double check something when it comes to a screening process, really for anything, it's going to be better off. And we have a list of questions that we can share with you that hosts that have been effective at having a great member experience and high quality members use. So it's questions like, why are you coming to the city? How long do you plan on staying? What is your income source? Asking if they've ever lived with other people in a co-living environment before, their feedback from that. Maybe ask questions like, how do you typically resolve a conflict? So it's at the end of the day evaluating the personality and then just getting the most up-to-date information on their income status. I think those are the two most important things. We found that credit scores did not correlate with the ability of a member to pay. So it's something that you can do, but I wouldn't recommend that. And I think to provide a little context, PadSplit has two stages of the approval process. The first stage of the approval process I discussed previously, the four checks that happen. Once you pass that, you're actually able to submit a booking request to an owner of the property. And the owner of the property or their property manager reviews the booking request and decides if they want to move forward. So the questions that I previously mentioned, personality questions, verifying the income source, asking them why they're moving to the area or what their intentions are in the area. Those would be questions you would ask of an applicant after they submit a booking request. And if you're satisfied, you can accept the booking request, they can move in. But if you don't feel like it's a good fit or you're not satisfied with their answers, you can decline that booking request too. So you still have a lot of control, and you think about it, it's really a two-stage process to protect you as the host from having a bad experience with a member. At the end of the day, members that have a bad experience, oftentimes, it's mutual. They just don't like living with other people, and they find small reasons to dislike people or not get along well. Co-living is not for everybody. We will
Mhm.
help that individual find another housing solution outside of PadSplit, or help them find a PadSplit they may fit better into too. So up
Mhm.
front, we try to do our best to screen people and have a good quality member. And then we also have triage and support if it's not working out to help you out. And as far as evictions, evictions are going to work very similarly to an eviction for a traditional rental property.
Mhm.
It's going to be filing similar paperwork, working with an eviction attorney or an eviction provider, and going through the local rules and regulations to follow the process so that way the eviction can be successful. Our eviction rate is around 2 to 3% of member stays end an eviction. So it's pretty infrequent. And then often when an eviction is filed, the member decides they don't want to have an eviction on their record. They work with the host, they find another housing option, and they move on too. So evictions are a risk with PadSplit, but you also have the mitigation where you have, a certain number of rooms. Chances are only one would be an eviction at any given time. So you still have revenue from the property coming in. You still have members that are in the house paying. So it's infrequent and also really isolated to a room versus your entire property if you had an eviction on a long term rental. And as far as creative solutions, we give the host autonomy. If you wanted to try something where there's an incentive to move out, you wanted to get the member, a hotel room for several nights to get on their feet. Those are things you have the autonomy to do as well. So at the end of the day, your current strategy for evictions really will carry over well to PadSplit, and it's something that you shouldn't be afraid of. And at the end of the day, we do have our legal team that is available to talk to your eviction provider or eviction attorney directly and give them some advice on different language they can use in the forms they need to fill out, and then provide just some peace of mind that yes, we have been able to evict people across many different markets, and it has always, worked out well. And my advice for the eviction process is really make sure you fully understand what the requirements and the regulations are before you start the eviction. And when you do start the eviction, follow everything as closely as possible. So if it does come in front of a judge, you receive the permission to evict the member, and then the process goes on from there. So a little bit of preparation and planning up front. If you do have an eviction that comes up, it is a much less stressful and successful process at the end of the day. And we do charge late fees. So if a member is behind on their membership dues, they will pay a late fee. So that definitely does help defer some of the cost if you have to have an eviction. And that amount is typically collectible if there is a judgment against the individual that was living in your house that did not pay.
Thank you for that, Andrew. That's super informative. We're almost at time, and I want to end on something a little bit more hopeful and bright.
Yeah, let's.
Yeah, we always seem to be talking about evictions. I want to ask you, what was something that we didn't cover yet that, from your experience, being one of the longest tenured employees at PadSplit and watching this company really grow and be the leader in co-living, being the largest marketplace for rent by room in the country. What is something you would want someone in the Seattle or the Washington state market to know about PadSplit and the opportunity? And yeah, what are you excited about, I guess?
Yeah, I'm really excited that we are in the investment part of our journey as a business, and PadSplit is where we're investing more in our brand, more in our human capital to make better decisions and have additional capabilities. We're investing in hiring additional host advisors across many markets. We looked at that earlier. So it's really the investment that's going into the PadSplit business. It's going to pay off for the hosts, the members, the investors that own the PadSplit business, as well as our team members at PadSplit, Suzanne and I included in that. So it's just the investment phase, and it's the best time to get involved in PadSplit before it's a household name and there's competition and everybody knows about it. If you can get in early on something, it's always going to pay off. And as I mentioned earlier, you'll climb the learning curve before your competitors do. And as you continue to have those learnings, you're going to have more and more success. And I think that's something that carries over to our business as well. Being able to bring on wonderfully talented people, give them the budgets they need to be successful. It's really helping drive improvement across a lot of parts of our business. And we're also continuing to grow our engineering team, our data team, and our product team. That's who develops the apps and the websites and the workflows for our company as a whole. And those individuals are really committed on making life easier and more seamless for the hosts and the members. And I think that's going to continue to pay off for the business as well as individuals that are utilizing our platform, where they're going to have more tools and resources available. We're going to have more training and more documentation. So if you wanted to know how to do something, it's going to be easier to figure that out. And I'm really excited about what we're building. It's been 7 years for me at PadSplit. I've seen a lot. As I mentioned earlier, we were at 50 bedrooms when I joined. Now we're
Wow.
almost at 35,000 bedrooms. And at the end of the day, it really comes down to, I think, two truths that drove the growth.
Mm,
Renters needed something that was more affordable and more flexible. Property owners needed to generate needed to generate more cash flow on their property. And if
mm,
we're able to enable both those things to happen at the same time, it's
yeah.
going to continue to drive growth for us as a business.
Yeah, I love that. Well, I feel like that's the best way to end the end the webinar. I'm including my contact here for anyone who wants to reach out to me. And if you want to get Andrew's contact, you can email me and I'll share it with you as well. But yeah, I want to thank everyone for coming and listening. And this is going to be recorded, so people will be watching it in the future too. And definitely follow the growth of PadSplit. Thank you, Andrew, for coming on today, sharing all of your knowledge and wisdom on PadSplit with us here locally in Seattle. Thank you for everyone who tried this LinkedIn Live. This is a new thing for us, so hopefully we're going to have more LinkedIn Lives coming in, and we'll have other people that will be able to spotlight. But thanks again, Andrew, and thanks everyone.
Sounds good. Thanks everyone for coming, and thanks, Suzanne.
Yeah. All right. Bye.
Okay.